Hello, this is Dave, and welcome to Equity Story. I'm with the Wolf, and this is just general share advice and not personal advice. And welcome, Wolfie. And tonight we've got Ask the Analyst live at 7 o'clock. So, especially if you're taking a trial, make sure you sign up and ask all the questions you want. You can ask anything you want. You can ask Wolf why he's bald, anything. There's no, as long as it's
I'll answer it.
Yeah, as long as it's just general share advice, no problem. Wolf.
Yes.
Right. So now we've got that. Elders, can you tell us? Obviously, we've lifted that target price. That seems to be working for us. What are the big boys saying on Elders this morning?
A couple of ones I've seen this morning, big brokers, that is. Let me just refresh. Maybe there was another one come through. 1 second. But anyway, first of all, Macquarie was very bullish. It smashed their expectations out of the park, and they've got a price target of 16.54. So they're very bullish on Elders at the moment. Now, remember, this could be a longer term type trade, or it could be a short term. We just don't know at the moment. We're going with the flow. So I'm very happy what I've seen yesterday, and I suppose I'm still bullish for the next 6 months. So I'm going to ride this trade as long as I can. Next one, Morgans. They've got a hold on it, but they're still quite bullish on it. The reason they got a hold is because they reached their price target. Their price target has moved from 13.60 to 14.75. But again, they're talking fairly positive numbers. Let me see what else. That was the two that I've seen this morning. So for us, hold.
And Wolf, CDA, the brokers have come out now. We've done a contrarian play.
Yeah, we have.
We've tried this one before, it didn't work, but we're doing it again. So
we're a sucker for punishment, so we're going to go again.
And this is not really how we trade, but we just feel that the way the market is at the moment, a few of these will help liven up our lives, make our lives a little bit more interesting anyway.
Yeah, but the other thing is we've had many more weeks now under our belt with CDA, so we've seen it's trending and it sort of has found a bottom now, right? So potentially, well, it seems like it's found a bottom technically. So with the update yesterday, we feel a bit more confident this time around. Anyway, so we've got Macquarie again come up with saying outperform for CDA. Very happy with what they come up with, and again talking about very positive outlook. And they've got a price tag of 11.60, so that's a pretty nice, strong upside day from where we're at. 7.85 to 11.60 is a long way away, and when you consider it trading on 14 times, 13 times, I'll take it.
Yeah, and definitely, Wolf, there are obviously going to be bargains in this market. Now, I suppose the number one question is are these bargains, are we going to get bigger bargains than what we got now? And we're talking earlier about the S&P 500. So, it's a bit of a benchmark. So when you look at that, we've gone from 4,800. I think the low was 3,800, roughly around 20%. Yeah. So this is what's interesting. This is what we're talking about. So historically, Wolf, right? These are some of the 14 bear markets since 1946. And if you can see here, 28%, 20, 28, 22, 36, 48, 27, 33, 36, 32, 51, 27, 33, 30. If you actually look at those pullbacks, history is basically saying, well, there's a good chance that when we start pulling back, we get this bear market, we're going to do a little bit more than 20%. There were 3 times that we did around 20%, but mostly it's a little bit more than that. And I think some of the bigger pullbacks we've had in 87, 33%, 2000, 36%, 2007, 51%. It's a good chance that we're going to pull back even possibly a lot further. So the market's still got further to go. That's what I'm saying. If you look at historical analysis, maybe you could say we've got an 80-90% chance that this bear market will continue. So yes, we're going to have this little bounce, but I think as the year goes on, we could get down to that sort of 38% or maybe even 50% down, Wolf.
Dave, look, I'm a numbers man, so I completely understand your figures. And just go back for a second to that thing. I just want to mention one thing though, is, because I'm a numbers man, I look at the figures here, and yeah, I agree with you. Probably a little bit more downside to come, but if I can say a positive out of this, is that over the last 20 years, the downturns, the bear markets have been much shorter than they were in previous years. So I did my quick calculations. It was probably around at least a year to say 2 years bear markets before in the last 8 years, but the last 20 years, they've averaged less than a year. So that's maybe the only positive here. So if we're going to go down to say 30% down, let's say, right, further downside, hopefully it'll be nice and sharp and quick, and then we can bounce and go on with it.
Yeah, well, definitely. And then I think it's all about that fear and greed, isn't it? As soon as you get the greed comes in, then everyone wants to come in and buy. So, and also, Wolf, surely there has to be an aspect of common sense. If you look at the S&P 500, it's had this crazy run up over COVID. Now, hello, we're only trading where we were at the start of January 21. I mean, if you squash the chart up, if we're going to use the S&P 500 or the Dow, I mean, really, it'd be totally normal to come back to the 25,000-30,000 range. It'd be totally normal to come back and do that and roughly do that sort of 45% retracement from the highs.
Look, there's always a possibility of that, right? I'm much more always optimistic than you are. So I am thinking, let's look at the first hurdles. And I'm looking at the previous high just before we had the pandemic hit, and that was close to that 3,500, right? So maybe that would be my first point of, okay, if we're going to go further down, there you got another maybe what 10-12% maybe, right? So yeah, look, I'm not, I'm agreeing with you. There's going to be probably more downside to come, but maybe hopefully not as bad to 2,500. Maybe.
So Wolf, whether it's 25 or 15%, we'll argue that when we get down, and we'll discuss if it's going to go further. But even if you're a simpleton like me, right? Yeah. And you go, okay, we've had this massive run up. Yeah. Right now we've got a potential nuclear war. We've got inflation going for the roof, and everyone's running for cover. Well, hello, come on, it'd be ridiculous even if we didn't. I mean, you'd be scratching your head if the market held up here. That's all I'm saying. You think that's
unless things change, of course, right? That's the caveat here. So let's say the war ends. I mean, that could be the end of that falls. Well, whether it does or not, well, we don't know, of course. We think, you and me think that it's going to probably be prolonged and it's going to go on for some time. That's why we think there's definitely much more downside.
Well, Biden, he's got his holster, he's got his gun, he's now having a chat with the Chinese. He says, he's firing a few shots above their head, isn't he? Saying, you go into Taiwan, we're going in, baby.
Yeah, but on the other side, he's saying that we're going to ease some tariffs on China. So I don't know what's going on, Dave. Is it positive, negative? It's still uncertain, isn't it?
Yeah, I know, but it's like it's the world's gone a little bit mad. That's for sure.
But look, there's a lot of issues. So downside still to come, I'd say. However, there has been some commentary out of the U saying maybe the pessimism is way too much. So let's see what happens. Looking at right now, I'm still depressed.
All right, but Wolf,
yes,
can this lead us on a little bit?
Yes,
to because there's certain stories that are trending and they're doing well, and we jumped on those, and we're going to talk about one in a second. CGF, which is doing well, but the coal stocks are up today. They're starting to look a little bit better. You got Whitehaven up, and they're trending. So we're very protective about, because there's not much that's going up at the moment where we can make money. So the issue is I'm going to bring the ABC because they've got a nice little chart. Is obviously 70. They're on 73 Labour. Yeah, they've got to get to 76 to win outright. Now, if they get to 76, they don't need the Greens. They don't need they don't need the trust fund babies. Right? They don't need any of those. It's all good. So now what they said is obviously if they can rule in their own right, they're certainly not going to be as sort of they're going to be environmentally conscious, but they're not going to take it to the degree the Greens were, or the Teals, right?
They're not going to shut down coal mines overnight.
Basically. So I think the market's looking at that and thinking, you look like you're going to win Lion, right?
Yeah.
So hello. The coal stocks are looking a little bit more rosy today, and looking quite good. So and also Woodside as well. And I don't know, just from a totally unbiased point of view, yes, me and you are very green, Wolf, but I think a sensible solution and not going too fast with obviously all this environmental changes makes total sense.
Oh, look, absolutely. I don't care if you're green or not. You still have to have sensible policies to switch from one industry to another, right? I mean, it'd be crazy and haphazard if you just did it overnight type solution. So, yeah, with Labor, if Labor does get the majority, I think it'll be a much more gradual process. I think they had the 2050 targets and 2030 targets. If Greens somehow manage to hold the balance of power, then maybe a little bit more radical. But still, I don't think it's going to happen overnight. It'll still be probably, there's going to be a progress of some time. So I don't think we're going to see massive changes to our trending stocks in coal. I still think overall it's much more driven by pricing out there than maybe the policies. But like I said, I don't think there'll be anything radical anyway.
So really, and also if Homes are caught and the Teals, if they can't get the sort of results they need straight away, well, maybe they could just go down to one car a family instead of 10 or 15. That would help a little bit, wouldn't it?
Unless they've got green cars, or maybe they've got old Teslas.
Maybe. Let's hope they have. I don't know. I think it's a bit weird, Wolf, all these Teals coming in, and but anyway, we'll see. Maybe
it just shows, doesn't it? It just shows that the Australian public has voted with the feet and said, sorry, both parties are just not up to scratch at the moment. We're going to go alternative.
Yeah, listen, but it is a bit of a good feel vote, right? You feel good, don't you? You know, when you're driving your Ferraris and Porsches around, you just helps ease the guilt conscious, doesn't it? Oh yeah, we'll vote for that. I'm not totally. But I think it has to be done, like you said, sensibly, and hopefully Labor will be a little bit more sensible with it. I never thought I would say that in my life. Labor would be more sensible.
I know. There you go. Look, funny things have happened, Dave, and finally we've got you onto the right side of the politics.
Yeah, well, you know me. I've only voted for Maggie Thatcher, mate. I'm still, I'm still in love with her. God bless her soul.
But that brings me to another point, Dave. With talking about Labor, and one of the big policies for them was childcare support and aged care support, and we've seen G8 education, right? Yesterday have a good day. But also we saw a little bit of a bounce in EHG and REG. And look, I know from experience, or not from experience myself, but Natalie started to work in this industry and it's completely all messed up, right? It is just ridiculous. So I'd say Labor will have some sort of a policy come in and support these industries and hopefully fix it up. Because first of all, the pay is crap, considering the job that they do, looking after the elderly population and giving them support. And second of all, just the actual industry itself has been stricken with a lot of issues. So hopefully there'll be something there, and maybe there'll be a trend or trade coming through over the next, say, few weeks that maybe we can look at. But for the moment, not yet, but maybe there's something will emerge where we're going to jump on some of these trades. Right.
Okay. Well, when you look at those charts, funnily enough, we actually were trending this. We liked the chart a few weeks ago. While you're off in Bali, bathing yourself in sunlight, and people were making actually money on that. But look, it's struggled to get over the trend line. Maybe it needs that little bit of a bit of news from the Labor Party or a bit of interest to get it going again.
Yeah, and I think they will. This is one of the strong policies for the election, that they're going to address this. So watch this space. I think if it happens, then maybe we're looking at 250 plus over time. So let's just wait. I mean, if you're on this trade, of course, you're probably still in it, right? So no need to get out of this yet.
Okay, so far today, because we're about trying to make money for people, Elder's looking good.
Yep.
CDA, if you're not in it, it's up, or it's looking good, hold on, or even get in it, it's fine. CGF, which we're trending actually, Wolf, we got an $8 target price.
Yep.
Nice little announcement. Come on, it's got to get over that 760 level by the end of the week, and we've got our $8, Wolf, and we've got another successful trade.
Yeah, look, it's looking good. A good update today. You know, it was more of a just a recap what was happening. They reiterated their guidance at the upper ends of the previous announcement of guidance. So positive. Also announcement they're going to be collaborating with a company out of, I think, North America. So that's also very positive for them. All in all, this is a trend that's probably going to keep going to that $8. I still believe in this $8 here, and it's not too expensive, Dave. It's a defensive story. The trend is still on.
Excellent. Wolf, I was listening to this guy in the UK, and he was talking about B-Box. Yeah.
Mm-hmm.
Now, if you look at B-Box, now what they do is very similar in our market to Goodman, right?
Warehouses, yes.
Yeah, warehouses, pretty loads in the UK. Good company, blah, blah, blah. So if you actually look 4 weeks ago, you look at Amazon, 4 weeks ago was when when the sell down started, right?
Mm-hmm.
Exactly why the Goodman sell down started 4 weeks ago, right? So it's interesting that the Amazon, Amazon not doing well, and a bit of earnings, a little bit of an earnings hiccup with Amazon. I think it's certainly B-Box affected it, but it's also affected Goodman. And often, when everyone's trying to understand, Goodman's not expensive. It's hitting all the goals. The growth is good. Everyone's trying to understand what this sell-off has all been about. And Wolf, when you look into it, it's arguably just the sell-off in Amazon. Now, what you're saying is only Amazon's what, 11% of Goodman?
Yeah, I think reading from the previous presentation, which was an update, which was earlier this month, I believe. Yeah, they did talk about it was in the low teens, right? So the actual market punished about 20-30%, yet it's only 11% of its actual total work that they've got. So it doesn't make any sense.
But that is the power or sentiment Amazon can put on a section, right?
Agree.
So, coming down here to sort of trend on Goodman, coming down here to that $19, even $18.50, surely the nibble makes sense, doesn't it?
It does. And the thing is, when you actually read through the Goodman report, they are well placed, right? So if there's say there's a downturn, Amazon slows down, they maybe don't do any more warehousing, or at least slow it down completely. There's a lot of businesses in this space that are so geared, Dave, that they're going to probably maybe struggle. And this is where Goodman comes in. The gearing is like nothing. They've got pretty much cash galore on their books. So they can go and buy all these distressed businesses. So it's actually great for them, right? This whole thing. So for me, it's just got so many things going for it. So look, this opportunity sell down is a buying opportunity in a way.
Right, very interesting. And so, for those long-term investors out there, there's one of those opportunities coming now, possibly with Goodman.
Yep.
Wolf, now WOA, wide open.
Yep.
Distribution contract. Where was that with? Have a look.
In Taiwan, wasn't it?
Yeah. Okay. So, like I suppose. Oat milk distribution agreement for Taiwan.
Yep.
Good news, but like you said, let's see how successful that is. It's
like let's say it's like a distribution with Coles, so they're going to get the products in, but the end game is how many can you actually sell now, right? Out of that distribution deal. So that will be the key. Nice announcement, no doubt. We had yesterday also a pretty good announcement. So far, a couple of very strong, positive to start of the week for WA. Let's see if they can go on with it.
Wolf, Technology One.
Mm-hmm.
Actually, that monthly doesn't look too bad, but it's not a monthly stock, so we're going to go back to the weekly. The weekly is just looking sideways. You like the announcement, but the issue again is just expensive, correct?
Yeah, look, it's probably two things here. It's still expensive 40 times, right? For a company that's growing, say, like 18, 20% and trading at 40, that's too much. It probably needs to get back to about 30 or below at the very least. So I think there's more downside here. And maybe it just wasn't strong enough. The announcement wasn't strong enough for the market out there. Maybe the market was expecting a little bit more out of it. So I think that $10 is a key figure for TNE. It needs to hold that. Otherwise, we're probably going back to 9.
Okay. Lastly but not least, Lychee Group. You know what? Isn't it great that you're saying it's flowers?
Yeah, I've never seen this company, so I've just come across it today, and I'm thinking, what do they do? What do these guys do? And it's actually a flower company, so they import flowers in and outside of Australia. So yeah, look, I'm fascinated about this. I think China is one of the key markets for them, so of course that wasn't a great for them right now.
Yeah, but what worries me with this company, isn't this one of the first things that as soon as we get food shortages and like the flowers go through the window straight away, they're not going to get much of a look in, are they?
Well, maybe we're going to start eating flowers. I don't know. I mean, that could be the next thing.
That's what I love about you, Wolf. You're thinking out of the box here.
But yeah, look, it was a downgrade, right? But maybe it wasn't as bad as people expected. So look, just an interesting company to have a think about later down the track. Yeah,
I did actually one day at boarding school. I did eat the headmaster's rose garden as a dare.
Oh, really?
Yeah. Yeah, they don't taste too bad, rose petals.
Oh, yeah, well, look, I'm sure there's lots of edible petals out there, flower-wise. So yeah, we could be, instead of being vegans, we could be flower vegans or something.
Yeah, go listen. Sounds great. On that note, Wolf, is that it? Yes, I think we've pretty much covered a lot. We've spoken a lot today. Yeah, hold it as you steady. Let's hope we've got a better week this week. When I'm back, market's got to go higher. Come on. I think Wolf. I think we will have a bounce before we go lower. Anyway. Right, anyway, join us tonight for Ask the Analyst. So let's see if you don't join me, that means you don't like me anymore. All right. Thanks, Wolfie. That was absolutely brilliant. And see you tonight. Bye-bye.